They bought $13.5 billion in Japanese stocks. As the public debt exceeds 237% of the country's GDP, in addition to the long-term investment component, there may be speculative interest in looking into the Japanese stocks. Welcome to the Coin Post. While the US stock market keeps suffering from the volatility caused by the upcoming US presidential election, investors decided to set a new record for purchasing Japanese companies, probably following the example of Warren Buffett, who in August invested over $6 billion into the market. So let's discuss what Warren Buffett and other investors might have seen in the Japanese stock market. Maybe these stocks can protect against the crisis, or they have high growth potential, or is it a negative interest rate? Before I get to the fun part, I'll remind you to subscribe to the channel and ring the bell so you don't miss new episodes. Now make sure you can concentrate for the next few minutes, and let's start. The current situation in the Japanese stock market is completely odd. Before Warren Buffett bought the shares in 5 largest Japanese trading companies, Itochu, Marubeni, Mitsubishi, Mitsui, and Sumitomo, for more than $6 billion, we'd been witnessing a continuous capital outflow, which has reached $132 billion. But other investors followed the Oracle of Omaha into this market, and in just 7 days, from October 2nd to October 9th, they bought $13.5 billion in Japanese stocks. It's a fundamental change of mood in the market, and to explain it, let's turn to history. Japan's stock market had long been a taboo for foreign investors, and the main reason for this was the lost decade. It's Japan's financial crisis, comparable to the Great Depression in the US. So, from 1985 to the end of 1989, the Japanese market was growing at an incredible rate and reached its historic high of 40,000 points. This ceiling is still valid. Then started a prolonged bear market. It's believed that the crisis lasted until the year 2000, but in fact the market did not hit the bottom until 2003. The Japanese probably got unlucky, and from one crisis, they were caught in the second one, triggered by the dot-com bubble. But again, their problems did not end there. Apart from the lost decade term, there are also so-called lost years. The second period ended only in 2010, as before they knew it, the global 2008 crisis struck. And so, for Japanese investors, the crisis lasted for 20 years. It's worth noting that Nikkei 225, the main Japanese stock index, shows a strong correlation with the US S&P 500 during the crises. I already mentioned the falls in 2000 and 2008, and in March 2020, it also fell 32% and then began to recover rapidly. This suggests that the Japanese market will not be a safe haven from the second wave of the global crisis if it strikes. But then, why did the money go to these markets? I'm gonna share my ideas in the second part of the video. Support me with your thumbs up. It's the best way to help you solve any big problem. What's probably worked on investors was Japanese stability. And although it's quite controversial, as the public debt exceeds 237% of the country's GDP and a negative interest rate that has been for years, but it's been that way for a very long time, which means stability. What's happening in the world right now? Despite the horrific pace of money printing in the US and Europe, neither the US Federal Reserve nor the European ECB have been able to bring inflation to its 2% target. They set this level to stimulate growth, but they can't succeed yet, and they are actually in recession. And while Europe and America are just figuring out how to deal with the new challenges to the economy, Japan has been under siege for the past 30 years. They switched to negative interest rates back in 2016, and the country is doing just fine. That is, Japan may now be attractive to investors as an island of stability. We don't know what the Fed's and the ECB's games will accomplish with their new monetary policy, which implies controlling average annual inflation. In Japan, however, they've been doing it for many years, and it's been quite successful. Add to that the fact that the Japanese yen is officially considered the currency refugee, along with the Swiss franc. and the huge government debt and the negative rates couldn't change that. The second important point is the threat of a new lockdown in the world economy due to the increasing rate of pandemic cases. Let's look at the charts. This is what's happening around the world, and it's not like there's a second wave after all. If you look at the data, it looks like the first wave and it's gaining momentum. This is what the situation in the US looks like. Here we have all the reasons to talk about the second wave. And now look at Japan, where the number of cases is seemingly increasing, but the rate of the so-called second wave is much slower. Such statistics give hope that Japan will successfully manage the second wave and that its economy won't shut down, while Europe has already begun to impose further restrictions. And the US risks doing the same. Interestingly, the situation with coronavirus is better than in Japan only in South Korea. And China, where it all started, their economy has already recovered, and there is no second outbreak of the pandemic. Everything points to the fact that Asians do know something. And maybe Donald Trump is not wrong to blame China. They have suspiciously good statistics. And the third important point concerns both Japanese stability and their stock prices. In September, they got a new prime minister, as Yoshihide Suga replaced a local legend, Shinzo Abe. This happened very quietly and had no effect on the stock market. Moreover, the new prime minister intends to continue the work of his predecessor, and financial analysts consider him to be more profitable for the stock price growth. Add to this fact that Japanese stock prices are less inflated than American ones, and the best proof of that is the recent purchase by Warren Buffett. He was always guided by the principle of the right price, and sits on suitcases with cash only because he couldn't find anything suitable in the American market for a very long time. Now he found it in the Japanese one. That is, in addition to the long-term investment component, there may be speculative interest in looking into the Japanese stocks. Buffett doesn't do that, of course, but if he thinks the price is good, then it's good indeed. But please don't go too far. Japan's had enough with one lost decade. Let's not give them another one. Share in the comments what you think of the idea of investing in the Japanese market. And I would appreciate your opinion. Let's have a discussion. Subscribe to the channel to keep updated. And that's it for today. Thanks for watching. It's the Coin Post channel. Subscribe and get enlightened.